In this video, I'm going to showcase a strategy using the Bjorgum Key Levels Indicator that you can use to take exceptionally profitable trades. If you find value in this video, remember to leave a like. Let's get into it. To add this amazing indicator to your chart, you want to go to TradingView and then load the 5-minute time frame of GBPJPY. Then click on Indicators and type in Bjorgum Key Levels, this one by Bjorgum. The Bjorgum Key Levels Indicator is a trading tool designed to identify and capitalize on 3 critical types of price movements in the financial markets: breakouts, false breakouts, and backchecks. Each of these movements represents a strategic point in price action that, if recognized and used properly, can yield significant gains. So, this indicator is made up of support and resistance levels, collectively known as key levels. These golden-colored levels represent resistance levels. As you can see, whenever they are broken by the price, they change color to blue. On the other hand, support levels are initially established as these blue levels. Similar to resistance levels, whenever these support levels are broken, they change color, but this time they change color to golden. Using this indicator to trade would be something like this. To take a long position, you identify a resistance level, like this, and then you wait for the price to break and close above the level. Conversely, to take a short position, you identify a support level. As soon as the price breaks and closes under the support level, you take your short position. However, using this indicator to trade this way is going to make you lose all your money pretty quick. In order to turn this from a losing strategy to a profitable strategy, we need to add 2 more indicators to the chart. On the Indicator Search tab, you want to type in SuperTrend, and you're going to select this one under Technicals. And then you also want to add an indicator called SuperTrend Oscillator, this one by LuxAlgo. Double-click on the SuperTrend Oscillator so we can change some settings. On the Inputs tab, you want to change the length to 20. On the Style tab, you want to disable the histogram as well as the plot option. And then here, we're going to change the upper levels value to 20. For the lower levels value, we're going to change it to -20. We also want to change the signal line color to white for both colors. After that, click OK. We're going to be using this indicator to confirm the presence of enough bullish or bearish momentum in the market before we take any positions. And the way we're going to do that is, for long positions, we're going to be looking for this white signal line to be above the 20 level, in an area where this histogram is colored green, and vice versa for short positions. Next, we also want to change the settings for the SuperTrend indicator. On the Inputs tab, you want to change the ATR length to 30, the factor to 5. After that, click OK. So, how do we use these 3 indicators we have here to take our initial strategy from losing to profitable? Well, I'm going to tell you. But before we do that, let's talk about the Forex broker called HenkoTrade. Now, I've been using HenkoTrade for quite some time. As you can see here, this is my live account on the HenkoTrade's web trader platform. The reason why I think HenkoTrade is a great broker is because of their low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest spreads can go. For those of us who love high leverage, well, HenkoTrade offers a maximum leverage of 1 to 500. And if all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $25,000. So, if you deposit, say, $3,484.50, well, they're going to give you a bonus of $3,484.50, giving you a total of $6,969 to trade with. To access the bonus, as well as all the other perks, well, sign up to HenkoTrade using the link in the video description. Now, back to the video. To take a long trade with our strategy, these are the conditions. Number 1, we want to confirm that the market is in a bullish trend. For that, we're going to be using the SuperTrend indicator. We need this trend ribbon to be colored green to indicate that the market is bullish. Condition number 2 is, within this bullish trend, We need the price to break and close above a support or resistance level. It doesn't matter whether it's support or resistance, just any of those two will do. Right here, we can see that this is a key level that just got broken by the price on this candle. Then, our last condition is to confirm that on this candle, the momentum histogram of the SuperTrend Oscillator is colored green, and that it also closed above this white signal line. At the same time, we need to ensure that this white signal line is above the 20 level. If you really want to be sure whether it's actually above 20, you just hover your mouse pointer on that histogram bar, and you take a look at this white text right here. If it says anything above 20, then there you have it. All the entry conditions are met on this candle, so we take a long position. Our stop loss is going to be placed under the key level. To know exactly how many pips under the key level you need to go, you just measure the width of this key level. As you can see, this is the number of pips, which means you can mark from the bottom of the level going down by the exact number of pips that we got earlier, which means our stop loss is going to be aligned to that. For the take profit, we're going to set it at 1.5 times the risk, letting the trade run and take profit. A few candles later, we had another position. As you can see, the condition for a bullish trend was met because the trend was bullish. And then the price broke and closed above this key level. Looking at the breakout candle, we can also see that the corresponding histogram bar on the SuperTrend Oscillator was colored green and closed above the white signal line. Looking at the signal line itself, we can see that it was also above the 20 level, which makes this entry a valid entry. We enter our trade here. The stop loss goes right under the key level, and we target a risk-reward ratio of 1 to 1.5. And this was also a profitable trade. Now, how do we take a short position? Well, we do the opposite of everything we did for the long positions. Condition number 1, we confirm that the market is in a bearish trend. For that, we use the SuperTrend indicator. We need this trend ribbon to be colored red. Condition number 2 is we need the price to break and close under a key level. This is our key level, and this candle just broke and closed below it. Then lastly, we need to ensure that this candle has enough bearish momentum to push the price all the way to our take profit. To confirm that, we just take a look down here, and we need a corresponding histogram bar that is colored red like this, and it should also close above this white signal line. We also need the signal line itself to be under the minus 20 level. Again, to confirm that, you can just take a look at your chart. This is the line that denotes the minus 20 level. As you can see here, the signal line is actually under that level, which is what we're looking for. All our entry conditions are met here, so we're gonna enter a short position. Our stop loss is gonna go right above this key level. We're gonna put it above the level at an equal amount of pips as the width of the level itself. If this level is 8 pips, for example, we're gonna put the stop loss 8 pips above that level. The take profit is gonna be 1.5 times the risk. We let the trade run and take profit. In summary, this strategy utilizes the Bjorgum Key Levels Indicator to pinpoint optimal entry points for both long and short positions. Key levels, once breached, signal trades aligned with market trends and momentum indicators. It's crucial to backtest strategies, including this one, to verify long-term profitability. We conducted a simple backtest of this strategy, and the results suggest it is highly effective. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.